James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Markets in Asia were little changed despite gains on Wall Street on Friday and better than expected Chinese industrial output figures. Stocks in the US recovered from earlier losses as tech stocks such as Apple and Alphabet gained, and energy stocks also had a late rally. This came after the initial jobless claims had yet again showed that another 2.9 million filed for unemployment benefit in the US last week. The warnings from health experts across the US continued as more states were set to reopen. Dr. Fauci has already been criticised for his comments on schools reopening by the president, but has now gone one step further by stating there will be more suffering and death if states reopen too quickly. In Australia, restaurants, bars and cafes in New South Wales, the country's largest state, reopened as the lockdown easing stepped up again. There are still fears about a second wave of the virus hitting as Germany's numbers increased after lockdown was eased. However, there seems to be a silent acceptance, at least in Germany, that the infection rate will slightly increase. Stock markets still remain nervous, so any headlines around spiking infection rates will be met with downside on the major stocks. The economic picture is now the biggest driver for markets, however, and that's for many assets across the board, as the weaker data points and show just how deep the economic hole will be. Friday sees retail sales data released, which is expected to show a 12% decline in April. What will be interesting with this, though, will be how resilient online shopping is remaining. Obviously, many shopping outlets and malls are closed in the US, so businesses are relying on the online sales more than ever. Also on Friday, Eurozone GDP is set for release this morning. Preliminary readings for Q1 expect to show the economy contracting by almost 4%. However, the ECB President Christine Lagarde has predicted that at its worst point, the economy could contract by 12 to 15%. It's been a torrid week for markets and could be set to be one of the worst since the beginning of March, but one where we have finally seen investors take notice of the economic picture. The optimism around the easing of lockdown has been replaced with the realisation that normality could well not return for many months. And such is the economic impact, we may be looking at a new normal as we adjust to a new way of life.